What is an index fund investing strategy? The index fund investing strategy is beautifully simplistic. It primarily involves buying into a mutual fund or ETF, exchange-traded fund, that tracks a specific market index, like the S&P 500 or NASDAQ. Essentially, you are betting on the general trajectory of the market rather than the success of individual companies. It's a passive form of investment because once you're in, you pretty much just sit and watch. You've got an entire roster of companies bundled into one neat package. So if you buy into an S&P 500 index fund, congrats, you're now mingling with power players like Apple, Google, and hundreds of other behemoths. And living up here in Portland, Oregon, it's sort of like choosing a forest hike because you want an all-encompassing experience, rather than picking a specific tree to climb. Both have their charms, but one is more about the collective power of nature. Advantages over active mutual funds. 1. Lower costs. Active mutual funds have fund managers who are constantly dabbling, buying, selling, and strategizing. All that razzle-dazzle isn't free, and it shows up in higher fees for you. Index funds, on the other hand, are like that reliable bus route that isn't fancy, but gets you where you need to go with minimal fuss and cost. 2. Diversification. Like a food cart pod here in Portland, with loads of variety in one spot. An index fund gives you a diverse mix of stocks or bonds, making your investments less vulnerable to the volatility of individual stock swings. 3. Tax efficiency. Because index funds trade less frequently than active funds, they generate fewer capital gains distributions. That means you're not getting taxed as much. It's like how we enjoy no sales tax in Oregon. It's just a little sweeter at the end of the day. 4. Strong long-term performance. Historically, index funds have often outperformed actively managed funds. It turns out that trying to beat the market is as tough as finding parking in downtown Portland during a Blazers game. 5. Simplicity. Let's face it, most folks don't want to pore over financial statements any more than they want to spend their Saturday stuck in an IKEA maze. With index funds, you invest, and you let it ride, which gives you more time to enjoy the finer things in life, like exploring the lush greenery of the Pacific Northwest. Remember, no investment is a sure bet. There's always a risk. But for many people, the simplicity and the potential for solid returns with index funds are quite appealing. Just like our Oregon trails, they may not be the most adrenaline-pumping paths, but they provide a reliable, scenic journey through the financial wilderness.